A lot of investors, young investors today want to know. I mean, I just had, one of them whisper in my ear before we started off the interview on the team, and they said, I'm a young investor. I'm investing in the good old SIP way. But if I want to identify those multi-baggers and find out what you look at in terms of your criteria, how can I do the same? What do you want to say?
Well, the thing I like to say is this is a full-time business first.
Okay.
This is not a business that you can do, 1 hour and one inside. It doesn't work that way. It typically will not work that way. You need a lot of focus and a lot of. If you are, say, someone who's a hairdresser or someone who's a lawyer or someone who's an architect, by all means do your profession and invest in the SIP in the market with your savings. I have no problem with that. But if you want to get wealthy in the stock market, if your chosen vehicle is wealth in the stock market, you need to focus on it 12 hours a day, 14 hours a day first. That's my first criteria. Second is you got to understand valuation. The most important part is that, as my mother taught me when we went shopping, कि रुपए की चीज़ अट्ठने में खरीदनी है. You want to buy things cheap. So I think that helps to try and, if you walk into a Zara, walk into Indian hotels, walk into a Bata showroom, what is the valuation of this business? And does it make sense to me? And occasionally market will throw this, as I call this, nice full toss outside the off stump, you can hit for a 6. So the thing I've learned, and the thing that I'd like to speak to young India, Avan, is that it's not a game of T20 where you hit out at every ball that comes to you, thinking, I want to make some money today.
Yeah.
Market is not for that. But you wait for something that is completely mispriced, and then you load up on that. So to give you an example, you talked earlier about me buying the defense stocks. So these stocks were available at cash value with 5-10-year windows of business available to them. So I think you look for those kind of opportunities.
Okay, that's wonderful. So you need to devote time, you need to understand valuations, and then wait for it to be mispriced and then load up on that opportunity. There you go.
You're ready to be a stock picker.
Look at me. Okay, what about DMart? Because that is one of the greatest retail businesses that India has ever built. It's a masterclass in economics and frugality. As chairman, running that, what did that really teach you from a real business that the stock market never would?
I don't want to talk too loosely about DMart because I was the chairman. I'm no longer the chairman.
Yes.
I've been term limited out of the chairman. And because I'm still close to the company, I don't want to talk publicly about it. But what it's taught me is that how great business is built and how it's important to focus on the business and not the market cap. I think a lot of mistake entrepreneurs make is the ego gets involved in the market cap, and they run the business for market cap rather than running the business, market cap being a byproduct of running the business correctly. So my advice to all the entrepreneurs is don't try and focus on market cap. Focus on executing a business. I think if you look at the execution, it's extraordinary execution that you see there. So my advice is ignore the market cap, focus on the business.
Any other mistakes that you think business owners or entrepreneurs make?
They make, I think, we value equity a lot, and if you keep diluting equity because you can raise money because the market is being philanthropic, you can give them money. I think that's always a mistake. So I think the scarcity of capital mindset, the ability to control your ownership stake is so important in the financial markets.
You've been honest enough to say, I think that you had lost $10,000 in 6 months. Am I getting it correctly?
Yeah.
Tell me about that. Take me back to that.
Well, here's the story, and it was a cheap education, Avan, let me tell you that, in retrospect, of course. So when I was a grad student, my dad was a bit troubled with me because I was not interested in the stock market, and he always kind of was interested in the stock market for me. So he made this wager with me that he'd give me $10,000 and that I can invest it in the stocks. And if I made money, that was my money to keep. And if I lost money, no questions asked. I didn't repay him back. So that seemed like a fair deal to me, right? And what's fairer than your father giving you 10K, right? So I started investing in America, and sad to say that within 6 months, 1 year, I lost the entire amount of money that I invested. And what particularly irked me, Avan, was that there was a bull market, the 82 bull market had just started. The Dow crossed 1,000 for the first time. And I happened to lose that money in a bull market, and I couldn't for the life of me figure out. But I used to be a reader, so I did some introspection and thought, what did I do? And I realized I came to the conclusion that the mistake I made was driving by looking at the rear view mirror and not at the front view mirror. You always drive by looking at the front view mirror. What was looking at the rear view mirror? I looked at the stocks that work in the 70s. What are the stocks? Gold, oil, commodities. But by the 80s, these things had, the era of inflation was over, Fed Paul Volcker had completely curbed out inflation from America, and you had to look at new degrees of stocks to do well, the capital efficient model to look well. So I never made that mistake again. Every bull market I look ahead to see what will be the new ideas and the new themes. I never try and make money just because stock has fallen 50%, think, oh, it's cheap now because it's fallen 50%. Because I know the stock that's fallen 50% can fall another 50%. That's the way nature of the market. So I never made that mistake again. So it was, in a sense, a cheap lesson, though it seemed expensive at that time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.